Hello, I'm Rhonda Porter, mortgage advisor from the Greater Seattle area, and I'm here with your weekly mortgage rate update for July 28th, 2025. Optimal Blue shows that mortgage rates as of last Friday are sticking close to the 6 3/4 range still. So, and if we look back over the last 12 months, as this graph shows, we've been stuck in this range ever since really November of last year. And rates started to trend a little bit lower in March and then bumped back up again at the beginning of April. So hopefully we do see this change, but this really has kind of been the range that we've been in. But please do remember that this is an average of rates based off of lenders that use Optimal Blue for locking, which is about 35% of the market. And we don't know how rates are priced, if people are paying a points or no points to get to this rate, what their credit scores are, and how much equity they have in their home, among other things that may impact the pricing of a mortgage rate. So if you'd like to have a rate for your personal financial scenario, please reach out to me. I am happy to help you with that. So this week is Fed week, and we'll know the results of the Fed meeting on Wednesday. And odds are currently about 97% that the Fed will not make any changes to interest rates at this meeting. But odds for the September 17th meeting, we have about like a 61% chance for a quarter point rate adjustment. So we'll see what happens with that. But keep in mind that when the Fed makes adjustments to the Fed funds rate, it's not directly impacting mortgage rates. So when they drop the rates by a quarter point, does not mean that mortgage rates are going to go down by a quarter point necessarily. So the only rate that the Fed controls is probably your rate for a home equity loan if it's attached to the prime rate. So mortgage rates are based on mortgage-backed securities or bonds, and they react to the Fed's actions or commentary, kind of like how stocks do, but oftentimes too, rates will already have that factored in based off of projections for what may happen with the Fed and rates. So it's already happening well in advance. And when we do see mortgage rates react to when the Fed makes an announcement on the rates, it's typically because the markets are surprised by what the Fed has done with their actions or by their commentary. This week is packed full of economic indicators that may impact the direction of mortgage rates. So we are, as I mentioned, the Fed is wrapping up its two-day meeting on Wednesday. So we'll see what their decision is, even though no change is expected. We'll also have the ADP employment report, which can impact rates. We have personal consumption expenditures, or PCE, on Thursday, which measures inflation. So that can impact rates if it comes in hot. And then last but not least, on Friday, we have the jobs report, which tends to impact rates as well. And we'll see how that number comes in. It tends to come in better than expected. And then with revisions every month, that kind of like brings numbers back to what people do expect. So it's a little bit frustrating because mortgage rates do tend to react to it, and the report doesn't seem to be that reliable. But we'll see what this Friday brings us. As I prepare this for you, mortgage-backed securities were up 7 basis points just a few moments ago, but now we're down about 8 basis points. It's not a huge swing. It's just before 11 p.m. Seattle time. The Dow Jones is currently down about 121 at 44,780. Seattle Times recently posted that weddings are costing around $60,000 around the Seattle area. So depending on what your income and debts are, instead of having a fancy wedding, you could buy a home. So of course I have to look at it this way when I see people like using this much money for an important event, but there's so much more they could do with $60,000. And a home is going to benefit you a lot more than a beautiful dress and a fantastic party. So this chart shows examples of homes priced up to $1 million with using $60,000 for the down payment and closing cost. So these rates are from last week and they are expired. So contact me for more information, even if you're not planning on getting married. One of the biggest reasons for owning a new home over a wedding is that owning a home helps you create a financial security. And this column shows how much wealth could be created from appreciation, and I'm estimating it at 5%. And paying down the mortgage, essentially paying yourself instead of paying a landlord, so through amortization. This is just in 5 years' time. So that $350,000 condo on the previous page would potentially give you $155,000 in additional net worth that you wouldn't have if you were paying rent. So, and if your parents or grandparents were planning on helping to pay for your wedding, they could instead contribute those funds towards buying your first home together too. And think of all the wonderful memories you can create in your new home. So after the wedding's over. So anyhow, contact me for more information. I am happy to run numbers for you or anyone you know. If you're thinking about buying, selling, refinancing, remodeling your home, or restructuring debt, or maybe even a reverse mortgage, I'm happy to help you even if it's months away. So take care, and I hope to talk to you soon. Bye-bye.